So you're comparing loan options, huh? Make sure you're comparing apples to apples. Let's talk about it. Hey guys, welcome to video 13. Today we're going to be talking about how to compare loan options apples to apples. What that means in practice is I'm going to teach you how to read a document called the loan estimate. The loan estimate is a document that your lender should provide you that shows what your interest rate is, what your fees can be, how much cash you're going to need to bring to closing. It's going to show you also things like your escrow amounts, your prepaids, and so on and so forth. We're going to walk through all that. We're going to see what that document is, what the different sections mean, and why and how you can compare those two sections to make the best decision in your mortgage process. Okay guys, I know this doesn't do you a whole lot of good, but this is a loan estimate. I know you can't read it, and even if you can, it's probably backwards, but I wanted you to know this is a standardized form, and every lender out there is going to have a form that looks just like this. It's going to say something different here at the top, but every lender is going to have a form that's just like this, and every lender is going to have sections on page 2 that looks like this. The same sections A, B, C, and D are going to be the same. E, F, G, and H, I, J are all going to be the same, and then their third page is also going to look the same, where you have interest costs, annual percentage rate, and total interest percentage. So you should be able to get this from any lender that you're looking at borrowing money from for your mortgage loan. Okay, page number 1, that is the summary page. It's going to be a big picture rundown of what your details are on the loan. It's going to have your loan amount, it's going to have your rate, it's going to have your P&I payment, it's going to have any escrow amounts that you have. It's also going to have a total of your closing costs and a total cash to close. The difference in those two is the total closing costs are just the fees associated with the loan. The cash to close is those fees plus any down payment that you are providing for that loan. All right, page 2, let's do section A first, origination charges. I want to make a clear distinction here. There's a difference in origination fees and origination charges. I know that is annoying as heck, but it's true. An origination fee is a percentage of your loan amount. So it's going to be 1%, 0.5%, 0.25% of your loan amount, and it fluctuates with the amount of money that you're borrowing. Origination charges are set charges by the lender that are not predicated on what your loan amount is. So if you have $1 million loan or a $100,000 loan, those charges, origination charges, are going to be the same. All right, sections B and C. Things you can shop for, things you cannot shop for. Let's talk about the things that you cannot shop for first. Okay, the 3 main ones there in that section are going to be the appraisal, the credit report fee, and the flood determination fee. All of those are determined by the bank. The bank has a set list of appraisers that it can use, and it has a set fee for each of those appraisers. Same thing with the credit report fee and the flood determination fee. They have contracts with those providers, those third-party providers, and you are not able to shop for those fees. Now, they will be different from lender to lender, most probably, but they will be very close. So just know that that's not a big section that you're going to find a big discrepancy. The things that you can shop for, buyers, listen close. This is where your title fees are going to be. A lot of times, you as the buyer are not able to pick that title company. However, it is a matter of negotiation when you're looking at trying to put a contract on a home. If you know and you have a great relationship with a title company, this is a place that you can say, I want to close at ABC Title, and that title company is able to be put on the contract, and therefore you're able to shop and effectively shop for those title fees. All right, staying on page 2, let's go to the second column. The second column has E, F, G, H, I, J in it. I'm going to talk about the F and G section mainly because that's where the bulk of the fees on that column are going to come from. This is where you're going to be able to really see if you're going to be able to compare apples to apples. Most lenders are going to have some way that they estimate taxes and insurance. When you're trying to compare apples to apples, you need to make sure that those two numbers, your taxes estimate and your insurance estimate, are as close as possible. Because in this section, you're starting to have to put together an escrow deposit and your prepaids. And so if one person has a tax estimate of $400 and the other one has one of $200, well then that's going to be, you're going to have one that's going to have half of the fees than the other one. If those two numbers are close or exactly the same, you're going to have a good apples to apples look at that cash to close number, which is what we talked about. That's going to be your deciding factor. Okay guys, real quick, as I was editing this video, I realized that I didn't talk about prepaid interest right here. When you're looking at this section of prepaid, you need to make sure that your prepaid interest, the days of prepaid interest are the same. If one person has 1 day of prepaid interest and the other one has 15 or 20 or whatever it is, then that's going to be quite a significant difference, and you're going to want to make sure that you have those days right. So make sure when you're looking and you're trying to get apples to apples, make sure that you look at those days of prepaid interest and that those are the same or as close to the same as you can get them. Okay, page 3 is what I call the happy page because it tells you exactly how much interest you're going to be paying. It makes you so excited. You cannot wait to get into this loan. The first little section there, they all have definitions beside them, but the first little section there shows you the amount of interest you'll be paying over the first 5 years. The second one there is the APR, which is basically your annual percentage rate, which is the rate of your loan plus any fees factored in. That's what you're going to be paying year over year. And then the last one is probably my favorite joyous piece of good news, and that's your total interest percentage. What that is a percentage of your sales price that you will be paying in interest for that loan. Okay guys, that about does it for loan options. As you can see, reading and understanding your loan estimate is probably the second best thing that you can do for yourself while trying to make a loan decision. The most important thing and the best thing you can do for yourself is giving me a call, and I would love to help you with that. I'd love to help you make a purchase of a home for your family to grow up in. If I can be of any assistance, please message me, reach out. I'll get back to you as soon as possible. Also, please leave any comments or questions down below, and hope you guys had a great day. Hope it was informative. Hope it added some value to you. Have a great day, guys, and we'll talk soon. So you're comparing loan options, huh? Make sure you're comparing apples to apples. Let's talk about it.